Good evening. My name is Jessica Amir. I'm one of the esteemed SaxoStrats team members. Before I kick off, I'd just like to pose a question. Steen started off really illustrating that we've seen commodities outperform the market this year. My question to you is, cast your votes on the poll. What component of commodities has seen the most growth across global equities this year? I think there's some pretty switched on people in the room, and I dare say that's probably because you've seen your portfolio probably hit record all-time highs if you've been invested in the bottom one, and that's coal. So a few people are thinking that lithium is one of the best. It was more so the case a little while ago, last year, but not so this year. My message today is threefold, and that is the first thing to consider with commodities is that they're only likely to see higher prices. So commodities, they are the lifeblood of inflation. So make no mistake, ladies and gentlemen, the biggest driver of inflation, no matter which economy you're in, the biggest driver is, of course, energy. And Steen and all the presenters today have alluded to the fundamental factors that are supporting high prices in some of these key commodities in the energy space. We just have to look at what Steen spoke about. So this year, the EU is going to run out of supply for gas. As a result, it's one of the best performing assets in the commodity landscape. A little bit down the rung, we can see the crude oil price. The crude oil price, raise your hand if you know what OPEC has said about next year. Okay, don't all rush at once. One person. Great, okay. I'm guessing Sharon knows, of course she does. But that is, OPEC has said that the world will run short of oil supply next year. So we've got two key commodities here that are running short of supply. The third one I'll introduce is on the other slide. But basically what I'm trying to say is, what I want you to all consider is that investing in inflation can be a good thing if you're invested in commodities. And ladies and gentlemen, this is a key component of driving outperformance. And I encourage you to consider, if you aren't invested in commodities, you might potentially want to consider doing so for the fact that we are likely to see higher prices later this year and indeed next year as well in some of the key commodities. What I want to speak to you about is coal. So who are the biggest consumers of coal? China, India, Australia. So the coal price, who knows what happened this week? Today. The coal price hit an absolute all-time record high. So it's about $430. The coal futures price, an indication of where the coal price is going to go in the future, is also higher than that. So $460. The key here is that, just like we're saying, we're back to the old rhetoric. So there's a finite amount of supply and skyrocketing demand. Australia, where I come from, it's a record cold winter. Demand for energy is peaking. But we know, ladies and gentlemen, have a look what happens in January. Volume spikes. Why? Because China and India, the biggest consumers of coal, they actually see peak demand. So, ladies and gentlemen, what I want you to consider here is that what's driving this record all-time high, and also what's driving record surpluses for Australia, record trade surpluses for Australia and also for Indonesia, is the coal price is on a runaway train. And this is the lifeblood of runaway record high inflation in Australia, China and India. And if we aren't invested in these, offsetting these punitively high prices, then we are at risk of eroding our money. So how do you invest in this? Well, at Saxo, we make it pretty easy, right? So you can invest in the physical commodity, or you can invest in equities. We all know the lifeblood of equities Equities are fueled higher and equity prices hit higher levels when earnings growth is fluttering. Who can tell me, don't all raise your hands at once, I know you don't like raising your hands, but have a think about this. This year and next year, actually, I'll say that again. This year, where has the most earnings growth came from? Energy. So triple-digit earnings growth was seen in the energy sector this year. Triple digits, I'm not talking a measly 100% earnings growth, we're talking 300% earnings growth. Earnings growth drives share price growth. So if you are in equities, this is something to consider. At Saxo, we make it really easy. If you want to go and have a look at forward estimates for what the market is thinking, what companies are likely to see earnings growth, you can do that on our platform. So you just have to click on search the ticker code that you want. Here's some examples. And then you can actually see what the forward estimates are. Whitehaven Coal. Whitehaven Coal, ladies and gentlemen, this year is the best performing global equity stock. So it's up 250%. Why is that? You're about to fall off your chairs. Their EBITDA, their earnings before interest, tax, depreciation, and amortization, their EBITDA grew by, guess how much? 1,500%. So that's Australia's biggest coal exporter. It doesn't end there, ladies and gentlemen. As we spoke about, there is a finite supply of coal and we're not even at peak demand. So I encourage you to use Saxo's platform, speak to us later, and as always, take advantage of the Saxo resources. But I implore you to consider investing in commodities. Thank you.
Thank you, Jess. Thank you so much.